Hello, this is George with the Harmony Trading System coming to you from our quarantine and lockdown in Frisco, Texas. And another day, another dollar, and we were looking to analyze the market for you for tomorrow, the 2nd of April. And let's start with talking about our favorite, and that would be NASDAQ 100. And if you watch the prior videos, you see how we called the move into 8,000. We got within 5 points of that, and we got there fairly quickly. Then the market reversed, and as long as we stayed above 7,800, we talked about continuing to be long, and that market reversed into selling pressure, and then we came to the 7,600, and at that point the market is changing dramatically. What we're looking for in tomorrow's trading session is to observe a couple of price action points and ranges that will hold significant for tomorrow's trading. As long as we trade above, or excuse me, below 76.61, if we trade under that price, then the open and the close of tomorrow's session is going to drift lower, and that will lead us into price action into the 7,400, where the market has some decent areas where it could bounce back up from there. We will definitely be looking for a stability patterns around the 7,400, but where we at right now, we're on 74.92, so clearly we're under the 7,600, and into tomorrow's session, as long as these prices below 7,600 and 76.61 is holding across the trading session, I'm looking for rallies as a shorting opportunity, and I'm looking for 7,400, 73, 77, and then the 73.50. And there, the market has to, the longs have to do a rescue package for this market. Otherwise, we're going to hit 7,200, then retest the lows of the market. So we have a couple of areas here where we need to be quite, particular about the range and very specific in what we're looking for. And NASDAQ, typically whenever you have a reversal like that, you typically have 2 to 3 days worth of a follow through in that direction. So let's just repeat what we're talking about. 76.61, the shorts have to hold on to that. Trading under 7,600 will trigger selling pressure into 7,400, and then off we go to lower prices where 73.75, 73.50, in that range. The market will start to consolidate, most likely to protect that level. Then at that moment, it's going to depend on how the market is willing to go lower or not. And we will be observing it tick by tick as the market unfolds. That's NASDAQ, and let's just take a look at ES. ES, it's the same type of pattern that you typically see in NASDAQ, typically you see in ES. ES actually is worse off than NASDAQ. It's weaker, and you could tell by the magnitude of the move, and also when the market was bouncing to be pressured. So that tells you that there is a disconnect between how those two instruments are working, and they're not in sync. Ultimately, they both move in the same direction, but one is weaker than the other. Now in ES, we are looking at a few levels here. We talked in the prior video about 7,600. You break below that, we're looking for a short. And then the market kind of continued that drift yesterday in a very convincing way. And if you look at this formation, you will see that the market has 1, 2, 3, 4. So it has four 4 attempts at that 7600, 7615 range and continue to fail to go higher. So that is the capping of that price structure for now. We're looking for the market, as long as we continue to trade under 2500, 2523. This is the range of 23 points. If we continue into tomorrow's session to trade under that level, then we're expecting the market to continue its selling pressure. So where would that take us to? It will take us to 2436. It will take us to the 2400. Then after that, you got a big drift into lower prices, a retest of market lows. And there's a lot of points. One of them is 2346. That is a gap fill area where the market will look to pause at or a little bit ahead of it in anticipation of a break below. So that would be an area for the bulls to actually try to defend. And if you're short, that could be a spot for a good exit of some of your short, if not the majority of it. So that is the read on ES. Now let's kind of play the devil's advocate for one moment here and assume that the market all of a sudden starts shooting up on bad news, because that's the only thing we got going on here in this market. But a bad news in the mind of the traders in the market is not as bad as they thought, and that is in many ways good enough for this market to kind of rally. And you could see 2552. If you start seeing that this market is going to break that little 2563.75 and potentially retest that 4 candle formation that we started this downward move from. Okay, if the market does that, what would I do? And what would I do? I wouldn't be actively being long there. I would be actively looking to re-short at these levels with a stop above the 2685. And I'll be very quick with it and keep my stops fairly tight to the vest. Okay, so in trading, you have to do a what-if scenario. And within the what-if scenario, you are looking to put a model together that will address an entry point, a market direction read, and what happened if that fails, what would you do? So every aspect of the trading environment you are prepared for. And that type of mentality, it leaves you focused and prepared, never flat-footed and surprised at what the market can do, and how it's not what the market can do, is how you are as a trader will react to it. So that's kind of what we're going to be looking at on ES. And let's throw in crude oil here for good measure and see what this market is all about. 21, here it's pausing with a doji and it's running back up. Very tired market with a stair-step pattern for lower prices. It had the formation here, a very, very solid formation that's holding up the price from breaking the 20. It's a psychological level. I wouldn't be surprised if I see the market reaches out to 2150, 2250 in the coming few days. And there you're probably looking for a formation to start looking for a reversal back down. This is a tired market, and in these levels, even though you could look at it as, oh my God, look, if you loved it at 65, you'll love it at 20. But the fundamentals of that market has changed. The war between the economic war, the oil war between Russia and Saudi Arabia is significant, and they're dumping oil like it's coming out of style here. So, and plus you got slowdown in global economy across the board in a significant way. So that's going to weigh down on the impact of the demand for crude oil. Okay, but eventually, you would assume over time, let's assume you are very, very, very bullish on crude oil. You think it's low prices. How would you put on a trade? How would you put on a trade and be successful at it? You have to be able to take some heat in crude oil right now. I mean, you buy, let's assume you have 10 grand, okay? Or, yeah, let's call it 10 grand. And you get into 3,300 of it right here. You have to wait for a drop to 15 before you add, and another drop to 10 before you add, okay? You have to have deep pockets. And you may not want to trade the crude oil future market if that's what you want to do. Okay, but that's the range in which you should expect crude oil to be in a very negative recession-driven global economy, because the demand for oil is not going to be that big and the price action is not showing any strength. So that is a price action where it's going to give you bear flags and it drops from it, then another bear flag and it drops from it till it hits that bottom that nobody knows where it is. And nobody can tell you what it is. So you have to kind of actually approach that trade from distribution of risk across time and across price levels, and be comfortable with that type of risk. Now, if you're a day trader and you're looking for entries and exits, I mean, a swing trader will look at anything below 20 as an out. An intraday trader looking for run-ups as a shorting opportunities on valid setups. So you have a swing trader, you have the intraday trader approach, and you have a weekly swing trader. Okay, and each one will look at the market in a different way and has to approach the market and the trade in a different way. So that's our look at crude oil, and we did fairly good today, not too bad. And I'll show you the trades that I took. We ended up about 2,200, and we were hitting it with 1 and 2 contracts. And we had a 6 contract here that I averaged into, and I came out of it decent. And then the last trade here, which I did around almost 3 o'clock for that much money on 1 contract. Not bad at all. That is from 46, almost 43. Yeah, let's look at that. Oh, excuse me. That's not 30. Yeah, 29 points, 28.50. 28.5 points on that trade. So that was a decent trade, but we could look at those trades together. All right, let's see here. Yeah, this is not gonna. Okay, you could see them. Let's just take him down from the beginning. All right, here we go. So that trade was when the market shifted from negative to positive. We took on the first pullback into the middle of the range with a stop below the 57 area, in and out for a profit on 1 contract for 276. Moving on. Okay, so that one we got in there a little bit later on that trade, but nonetheless we saw that one. We added 1 more here, and we got out 1 and 2 out here. It kept running, but that was a fair price to get out of here, and that was target number 2 in the system. So we took it on a legitimate target. So that was 522. That one we went short on. We saw a captain set up short. Market came in there, gave us a railroad switch trade, and boom, entry, and we pocketed some money here on a pause, and that was target number 2 in the price action. So we went from target number 1 to target number 2 in our rotation. It gave us more, target number 3, but hey, nonetheless, we made 210. So we're about 1,000. All right, so here came the markets shifted from negative to positive. First reaction, we front-ended that trade a little bit, but we came in at 86.96. We made 9.5 points on that trade, and it gave a little bit more, but I didn't have to sit through, 10 minutes worth of price action. I just made my 10 points or 9.5, and I got out. So for 186 on that. What did we do? There's a couple more trades here. We left the market a little bit. Yeah, here we got lopsided a little bit, but we had we had our range that we were trading. We got in one here, one and three for 6 contracts, and we exited out all of it at the runner to the middle of the range. The market, I anticipated a reversal that didn't happen, but I was trading within the range that I was in, and I was comfortable with the risk. And that 6 contracts made me 448 on that trade. So we're at 1600. Then we had that one last trade that we made, and that was a beautiful captain setup on an inception trade. Market gave us a switch trade right here, and boom, we held on to the trade as it continued to go higher and higher and higher, and 74.90 from 74.61 and a half, and we were done for the day. And that was it. So the majority of the trades that I actually made, I made them all by 9 o'clock, and I was up $1,200. Then at the last hour of the day, participated in some action for an additional a little bit over 1,000 for 2,200, and we were done. So that's how we approached that market. And my objective for this coming, we had a magnificent month last month, without increased absolutely crazy volatility. So my approach right now is to kind of lock in that profit by reducing my exposure to higher contracts of 10, 20 contracts. Instead of doing that right now, let's pocket this money and play this small ball games of 1 to 4, 5, 6 sometimes, and anything under 10 contracts. Just play that game for a little bit and put my distance between me and the money I made last month. And that would be a victory for me. So I'm going to be looking to make 1,000 to, I'll take whatever the market is going to give me. I'm not going to say anything. I'm going to trade what the market is providing. But my approach this month is trying to lock in my prior month and take less risk per trade versus what I was doing last month. And that is it for us here in Frisco with the Harmony Trading System. If you guys have any questions, reach out to us, subscribe, get the notification up, because we're going to be posting videos like this, and we're going to improve this process along the way as we go along. And if you have any questions, let us know. I answer all my questions on YouTube, so if you have any questions, just throw it in there and it will be answered. And have a blessed day. Stay safe. I know it's kind of tough to be locked in and not going anywhere, but you're staying home to save a life, and you have to appreciate that. So we'll see you guys on the next video, and have a blessed day.